Hello, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news we're in the shadow of the RBNZ rate review this afternoon. But first up today, there was another dairy auction overnight, and it was a disappointing downer, reversing most of the gains from the previous event. No doubt the risk aversion sweeping financial and commodity markets worldwide affected bids. In any event, prices dropped 2.6% overall, with the key whole milk powder price taking the least hit, down just 1.7%. In New Zealand dollar terms, however, the overall result was actually a tiny rise as our currency's depreciation took up the slack. Volumes sold at this auction were the highest so far this year. And Wall Street is staging a bit of a bounce back today, recovering about a third of yesterday's losses. But it was lower yet again in Europe overnight, and global bond investors haven't changed their negative view today. Yesterday in Shanghai, their equity market was down sharply, Hong Kong was down too, and Tokyo was also lower. But that was light compared with a 2.4% drop in Australia. And the NZX was down 1.7% yesterday. These declines will hurt KiwiSaver funds if they're sustained in August. In the US, job openings and hiring fell in June, suggesting that demand for labour was cooling in tandem with their slowing economy. Of course, this data well precedes the recent heavy market corrections. But things won't have gotten any better since then, and that may provide yet another reason for the Federal Reserve to cut interest rates again next month. Another front may be opening in the trade war. China has told India not to block Huawei from doing business in the country, warning there could be consequences for Indian firms operating in China. And in China, another company is struggling, this time a large regional dairy company, and it is seeking a state bailout to survive. In Germany, factory orders rose unexpectedly in June, up 2.5% from the prior month. The trade surplus in Australia just keeps getting larger and larger. We had reported April as an all-time record surplus, then May was an even bigger record. Now we can report that June was another huge surplus, this time far, far larger than any previous month, at $8.6 billion. That means for the year to June, they had a good surplus of over $53 billion, or 2.8% of GDP, and far above any prior result. Despite these great trade outcomes, the RBA has trimmed its economic growth forecast yet again to 2.5% this year, the third straight revision lower, and admitted that inflation will undershoot for years. They did this when holding their official interest rate steady at a record low 1% after two consecutive 25 basis points cuts. And the US Treasury 10-year yield is unchanged today at 1.73%, embedding earlier weakness. Gold is up another $5 today at $1,472 an ounce. US oil prices are lower yet again. They're now just under $54 a barrel, which is another fall of almost $1. The Brent benchmark is also lower at under $59 a barrel. And the Kiwi dollar starts today softer at 65.2 US cents. On the cross rates, we're still surprisingly firm at 96.5 Australian cents. Against the euro, we're softer at 58.2 euro cents. That sets the trade-weighted index a little softer at 70.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.